Welcome to Empower Her Radio, the podcast for healthcare moms who want to break free from limiting beliefs, build unshakable confidence, and step into the truest expression of themselves, both personally and professionally. I'm your host, Corey Wynn. I'm a wife, a mom, a doctor of physical therapy, and a peak performance strategist. Working with highly motivated women to transform their lives and inspire those around them is what truly lights my soul on fire. Each episode, whether it's a solo session filled with actionable strategies or an inspiring interview with a woman who has overcome significant obstacles, is designed to leave you feeling worthy and confident in the value you have to offer everyone around you. I hope you walk away empowered and ready to take that next step to lead your life on purpose. Now, let's dive into today's show. Hey guys, I wanted to pop in real quick with a special offer today. Everything that I do here at Empower Her Radio and in my private coaching practice, Elevate and Empower, is to empower and equip women, specifically moms, with everything that they could possibly need to live their dream life. So I want to give you my dream life blueprint today that can help you get started with that. Just head to corywynn.com/dreamlifeblueprint and you can find that in the show notes. All right, now back to today's show. All right, today I am so excited to introduce EGrover. She's an individual insurance broker as well as a women's basketball coach. And I met her several months ago at a women's coaching conference, and we have stayed in touch ever since because as my parents began to age, I realized that years ago I looked into long-term care insurance and we couldn't afford it. It wasn't going to cover enough, and I was really at a loss. So when I met Emma, she said, "No, Corey, there's so many other things." And I sat and chatted with her for probably longer than she needed to chat with me, but I so appreciated it. And I have information that I can share with my parents now. And so I thought that if I could have her on the show, then you guys would get that information too. So let me do a quick introduction. And she is, like I said, full of information. So Emma was a 5-sport athlete growing up, but truly excelled in the game of basketball. Her love and passion for the game led her to play for a brief time during her college years in 2 different programs. Emma has been coaching for a total of 6 years. She has coached kiddos from the junior high level all the way up to varsity. She is currently the head coach of a co-op ed program for the Carlton Renshaw girls basketball program. She is also the head coach for the 17U Playmakers Showcase North team. Her enthusiasm and love for the game have not changed since her years on the court. Emma has a passion for investing in the kiddos of her community and teaching them the values of life through the game of basketball. It can teach us so much, and she finds great value in sharing that with the kiddos of her teams. Outside of Wheeler Associates, Emma really values the time she can spend with her family, friends, and her dogs, Chester, and the newest addition, Honey. Emma enjoys traveling the world, typically to a white sandy beach with warm weather somewhere, but would not pass up a trip to the mountains as she's a former Denver, Colorado resident. Emma has served as a member of the Fuse Duluth Leadership Council, is currently a member of the Women in Financial Services Network, National Association of Insurance and Financial Advisors, Ash Brokerage, She Impacts Network, and is currently building a network of her own in her local community. She enjoys networking with other young professionals in Duluth and the surrounding areas. Emma has a true passion for reducing the stigma surrounding mental health and is passionate about making a change in this area of our community. Emma also enjoys fishing, camping, hiking, riding jet skis at her family's summer home on a small lake in Barnum, Minnesota, and going on walks with Chester and Honey. Emma is here to talk through your individual insurance needs and is happy to help in any way that she can. Emma is nearing her 9th year at Wheeler & Associates. She has supported many areas within the organization and is sure to connect with you with the right person, should your need be not within her specialty. Welcome, Emma. I'm so glad you're here today.
Thank you so much for having me, Corey. I'm super excited to be here.
Well, and just another caveat and wonderfulness to this, I worked with women's basketball in college, so women's basketball is pretty big on my heart as well. So we have that in common too.
Yes, I love it. it's been a part of my life since I can remember. I played from when I was yay big until now, and I can't play quite as often as I'd like to, just due to some of my own physical inabilities. But I carry that into coaching now, and it's just a big passion of mine. So I really enjoy it. So,
Well, all of
yeah.
your kiddos, I'm sure they're for all ages. They're not necessarily kiddos anymore, but they're very lucky to have you.
Yeah, well, thanks. It's fun. It's a lot of fun. They teach me probably more than I try to teach them, and I learn something new every day. So
Yeah,
it's good. It's a good time. So
that's
yeah,
awesome.
yeah.
Well, I know that I reached out to you specifically about long-term care needs and whatnot, and you told me so much about annuities and everything that you guys have to offer. So, can you give us a
Mhm.
little bit of an idea of maybe the differences between like traditional long-term care that I think a lot of us are have heard about but don't know much about, and then what an annuity would be instead or in addition to?
Yeah, yeah. So just kind of generally speaking, in the long-term care industry, there are many different avenues, solutions, you could say, for how to get coverage or what kind of coverage may be the best coverage for you. So, as you mentioned, traditional long-term care is probably the oldest, if you will, solution that's been around the longest, but it's not necessarily the best solution anymore. A lot of people will see in the headlines, newspapers, online, on the news, ABC, NBC, all those Fox News, the projections from, all these Genworths, Mutual of Omaha's in a better situation than Genworth is, but these old projections for the longevity of people's lifetime and how long they were going to live was misconstrued. So people are living longer, right? And even with their health issues, they're still living longer. So they're needing care for longer, right? But the cost of care is going up. So their projections for what it would cost and how long they would need those funds was inaccurate. So now we're seeing all of these companies in this industry saying, okay, wait, we did not calculate this out correctly, we did not project this correctly. So they're increasing the cost of these policies. So, and they reserve the right to do that, unfortunately. So a lot of what we're seeing now today is people that paid for these policies, their whole lives for the past 30 years are coming to us and saying, wait, they're increasing my policy by 120%. They're doing a step process of increases. So, 50% this year, 65% next year, and so on and so forth. And we can't afford this anymore, especially for a couple that has two individual traditional policies. What do we do? And so the carriers are coming forward with solutions where a lot of people will need to change their benefits and come up with a lesser benefit that has, it could be a paid up benefit, but which eliminates the premium, but will lessen their benefit, if that makes sense.
Mm-hmm.
Or they can keep their current benefit the same, their monthly benefit, but the premium goes up. So that's that increased premium, right? So it's kind of a lose-lose, right? So you get a lesser benefit for no more premium, or you get the same benefit for a lot more premium. So it's just a poor projection on their part, and they're essentially could be going bankrupt. Don't quote me on that, but and so it also has to do with interest rates.
Mm-hmm.
So the traditional long-term care column, if you will, is not what they thought it would be, and that's one solution. Now, today's traditional long-term care, if you were to go out and buy a traditional long-term care policy today, looks completely different. It's still a viable solution because the projections are more realistic and based off a more volatile environment, right? Because our interest rates were solid, and then they weren't, and then they were, and then they weren't. And so just projecting a more volatile environment. So preparing for that. So like a company like Mutual of Omaha hasn't increased their rates in more than 20 years, but a company like Genworth has. So we have the ability to kind of have the feelers out in the market to kind of get through the weeds on that. So that's one column of long-term care, of the long-term care option, if you will. Another kind of option is what's called a life insurance policy with a long-term care rider. So it's kind of a combo, if you will. And so this is a product that has a life insurance policy chassis, is what they call it. So that it's built on that life insurance foundation. Mm-hmm. And so then the product, then if a client has a long-term care need down the road, they can tap into that policy if they qualify for benefits for under the long-term care umbrella. They can tap into that life insurance bucket of funds to pay for their long-term care needs. Is kind of how that works. Okay? So that's a very simple concept, and that's kind of that second column. Okay, so that's a second option. And so a third option is the annuity that you mentioned. Typically, these are super straightforward and not as intensive with underwriting questions, and are a great solution for some people. We did one of these, I don't know, a few months ago for a client where they had excess assets that are just sitting in cash, and they have the ability to kind of just dump that into an annuity that then leveraged their cash times 3 into a long-term care benefit that's available to them right away on day one. And it's just super straightforward and fairly easy. It's an application and underwriting process of some questions, but it's not nearly as intensive as the traditional or the life insurance chassis. Okay. The fourth option is a little bit more like what I call, I don't know, like the Bentley or the Cadillac option, which is, super inclusive of life insurance, long-term care, and the ability to get your money back in one form or another. Okay. So to kind of recap on the first 3 options, the traditional long-term care, if you pay a premium on this policy every year from the time that you buy it until you pass away, and let's say you never needed a long-term or you never qualified for a long-term care claim. You pay that premium that entire time, but you don't use the policy. You lose all of the money that you paid into the policy. Mm-hmm. Okay, that's traditional long-term care. You don't see any of that money back. Life insurance with long-term care rider. If you pay the premium into the policy, but you never have a long-term care claim, when you pass away, there's a death benefit that pays out. So you would see some of that back. Okay. This also, if you decided you didn't want the policy anymore and wanted to terminate it or cancel it, you would get a portion of that back. The percentage is 50 to 60%, depends on the carrier and the policy and fine print. Okay. Mm-hmm. Annuities. Typically, you would not go into a long-term care annuity with the idea that you wanted to turn around and terminate it, because you would lose out on funds that you put into it. You would get some back, but you would have a loss there. So it would just not be a recommendation that we would make, like, hey, we want to put you in this product, but then if you're like, oh, I'm going to turn around and cancel it in 4 years, we would not make that recommendation to begin with. Mm-hmm. So this Cadillac product is, in the insurance world, we refer to it as live, quit, or die. Okay. So if you live and you have a long-term care need, you will receive a benefit. If you decide to quit the policy, meaning you're done, I I need the funds back, you know, um, with the policy, you receive anywhere from 75 to 85% of the funds back. However, there is an additional rider or stipulation we can add into the policy where you would be able to receive 100% of those funds back. It does come at a fee, but there is an option, okay? And then if you pass away, it's very similar to the option two, where it's the life chassis, where you pass away and there's a death benefit and you get those funds back, okay? This is called a hybrid policy. So the long-term care hybrid option is the fourth option, and it just kind of encompasses all of those. And this can be as big and healthy of a monthly benefit for long-term care as you want it to be, and it can have as large of a death benefit as you want it to be. They're all customizable, so those are kind of the four pillars that we do the most business on when it comes to long-term care. So I know that's a ton of information, so we can kind of go back and regroup and ask questions through those if you'd like, and dissect them a little bit more if you'd like.
Well, and I think when I think back over my career as a physical therapist, even in all the different settings that I was in, the amount of people who I worked with who just needed supervision at home, or their family could provide, say, 4 to 8 hours of help during the day, but they needed that additional coverage, or they needed memory care, but one family member was still at home. When it comes to situations like that, is there a direction that you maybe would want to look more at than the other? Because I remember when even 15, 16 years ago, when I looked at long-term care insurance for my parents, it was going to be $800 a month for both of them. And looking at the coverage, it wasn't going to cover much of anything that projecting forward I thought that they might need.
Yeah, absolutely. That's a really great
So
question.
what
Okay.
kind of avenue if for like just money available?
Yeah, absolutely. So the traditional long-term care style policy has what's called a reimbursement benefit. So us as the broker typically will work with the client when they have a long-term care event. They would pay the cost of whatever the care is. Let's say they have an appointment and that was a $500 appointment. They would pay the cost of that appointment, send us the receipts. We would take the receipts, record them in the system, and then file them with the policy at, let's say, John Hancock. Okay. And then John Hancock would then mail a check from a reimbursement from their policy to the client. Okay. That's how a traditional policy would work. Annuity is typically similar style, as is the life insurance with long-term care rider. However, life insurance with long-term care rider, some of those policies also have like what's called kind of like a cash advance, where they'll have X amount that is cash indemnity available, if you will. So let's say like $2,000 is available to just be sent to them in the form of a check, and they can just spend that how they would like. They could spend it towards their appointment, or maybe they pay a family member who's come into the home to help care for them. Okay. The hybrid policy is more cash indemnity, which means if they built a ramp that cost them $14,000, on the outside of their home because somebody's wheelchair bound, client is wheelchair bound, and their policy pays them a $20,000 monthly benefit, they would just receive a check from the carrier for $20,000. They don't have to prove that they built the ramp, and they could, reimburse themselves for the $20,000 or for the $14,000 that they spent in the ramp, but also buy groceries. They can pay somebody who helps care for the individual in the wheelchair, make their car payment. There's no regulation on how that money is spent, as long as the individual has proven that they qualify for care. Mm-hmm. So, and we can go over that in a minute as well. But so there's either reimbursement or typically cash indemnity, style benefits. Yeah.
I know a lot of patients in the past, and well as my family, they're always concerned about leaving something behind for their family. And
Mhm.
my husband and I have talked about this recently. Like, I could care less if my parents have anything left behind. I want them to be taken care of. But if somebody were to want a portion of that as a death benefit, or, correct me if that's not the right verbiage, but is there a pathway to go if you're looking for care, but you're also hoping to have something for your family left behind?
Yeah, absolutely. So there's kind of two avenues that we could work out. Typically, the hybrid policy would not be a bad solution for that,
Mm-hmm.
as it does have the long-term care and life insurance, but it would be a better solution to kind of cushion both of those, to provide the long-term care need, but also provide the death benefit. And we can design it that way. As I mentioned earlier, everything is kind of customizable
Mm-hmm.
per person. But also, you could do a long-term care annuity and do a life insurance policy separate.
Okay.
So then it's specifically focused on each of those solutions. And people, when they go through underwriting, if you will, part of the process, again, something else we could touch on separately here, you can still do those applications at the same time,
Okay.
and just, we would just say, hey, this is what we're looking to do. This is why we have two separate applications, but this is what's the big picture, what we're looking to accomplish here. And this is why, we're doing life and long-term care.
Okay.
So,
Is
yeah.
there an age cap as far as, okay, you've now surpassed the ability to be eligible for any of these?
Yeah, so another really great question. Typically, early to mid 70s is kind of the cutoff. It does depend on the carrier, and it does typically depend on health as well.
Mm-hmm.
I've done as old as 72, with for a hybrid policy.
Mm-hmm.
I've also, gosh, and for life insurance, because that has life in it. But I've also done as young as like 45.
Mm-hmm.
So it just depends on the planning and the resources that people have. And then again, health is also, a big part of the equation as well. So
Mm-hmm. Is
yeah.
there a good time to start looking at these policies as a younger person? Is there, too early?
Yeah. Yeah. So my recommendation would be to like start thinking about it around 45-ish.
Mm-hmm.
Start looking at what assets you have, talk about it with your financial planner, see what accounts you have, see what policies you have. Because another thing that we are able to do is, if you have like permanent life insurance that you've had since you were like in your 20s, or maybe your parents bought you a policy when you were young, sometimes people will take the cash value from that and roll it into a long-term care policy. It's called a 1035 exchange.
Okay.
And so you can use those funds to help buy you a policy as a 50-year-old. So I would say like 40s, start thinking about it and try to map out what that looks like. And the most common age to start like actually looking at an application and what design and planning as far as the specifics of a policy go are 50s,
Okay.
early to mid 50s. And if resources aren't available at that time, 60s are still very healthy time to do it.
Okay.
But when it starts to get a little bit too hairy is probably like mid to late 60s. Early 70s is when it's like, okay, we can still do this, but it's a lot harder to get an approval. There's no guarantees, you know what I mean, that kind of thing. So yeah, that's what I guess our suggestion would be.
Okay. Now, if somebody has like term life insurance, do any of those policies roll over or no? Or does it depend on who it's with?
Um, yeah, so term life insurance is still really great coverage. It depends on the kind of term insurance, because some term life insurance is what's called convertible, which means you can convert it to permanent insurance.
Okay.
And so, again, that depends on the carrier and the kind of term insurance you have. And so if it's convertible to permanent insurance, maybe some people have done that and can do that. And then once they've done that, depending on their age, then maybe down the road from there, it's built value and can be changed again.
Oh, okay.
And so the other idea is depending on people's age, maybe the term insurance just isn't a good fit anymore. You're able to cancel that and just reassess and look at the bigger picture.
Okay.
So
Okay.
yeah.
Are there, I don't know, are there like state stipulations? Are all of these national type companies kind of go wherever, or does it depend?
Yeah. So a couple things with the insurance carriers. So Wheeler Associates specifically, we're in Duluth, Minnesota. We are a private financial firm,
Mm-hmm.
but we work with a company called Ash Brokerage, which is our partner broker. They are kind of an arm of Commonwealth Financial Network, which works with our financial planning side of the business in 401k. Ash Brokerage is based out of Fort Wayne, Indiana. And so when we work with them, we have the ability to shop all of the insurance companies in the market
Okay.
versus like we're not tied to, let me think, like we don't always have to work with Pacific Life or we don't always have to work with John Hancock. So we can use Principal, we can use Mutual of Omaha, we could use Guardian, you know what I mean? And so when it comes to long-term care, sometimes, let's say somebody's diabetic, there might be a carrier out there that's a little bit more forgiving when it comes to underwriting. And as it relates to somebody being diabetic, they might have lesser stipulations around that and be more willing to approve a client for a policy than another carrier.
Okay.
And so it's just really nice that we have the ability to kind of be flexible in that space and have the ability to work, with more carriers in that sense. I feel like we're able to kind of cater to people a little bit more.
Okay. Now, this is probably a large question and it all depends on so many things, but is there kind of a bottom line policies or premiums are going to be at least this a month or this month a year, this much a year? Or is that, I know there's so many different factors between all the different choices, so that's a pretty broad question.
Yeah, no, that's okay. So, um, like what comes to my mind first is like life insurance. Typically, life insurance, like some companies won't go lower than like a $50,000 base, right?
Mm-hmm.
For a death benefit. Like you have to buy at least that. For long-term care benefit, I think like the lowest I've seen in my time, and I've been in the industry for almost 9 years, like the lowest I've seen is like a $2,000 a month benefit.
Mm-hmm.
And so as far as that equates to premium per month or per year, like what that looks like, that depends on someone's age and their health.
Okay. Okay.
So, yep. And so I'll kind of segue that into how that works as well. So the process for long-term care, like an application and underwriting, how these companies make their decisions is you would put in an application and the application goes to whatever company you decide to apply with.
Mm-hmm.
And they look at your age, your health, and they pull your medical records with your permission, of course, and they will assess all of that information together and then make their decision on, what is the risk and the likelihood that you're going to have a long-term care event. Okay. And if you're less likely to have a long-term care event, then of course they would like to approve you because you're going to pay them premiums, right?
Right.
And if you're going to pay them premiums and they don't have to pay out a claim, then obviously they get to collect more money, right?
Right.
So that's kind of how that assessment works. And then when you're approved for a policy, then obviously you would work with us. We place that for you. We're kind of your maintenance. We stay in touch with you through the years, make sure that it's still a good fit, do kind of like an annual review with you. We're your broker, all of that, kind of all of those touch points.
Mm-hmm.
And so we're like your financial planner, but for insurance. So that's how
Okay.
that would work, if that makes sense.
Yeah.
But as far as qualifying to like file a long-term care claim, the way that that works, and this is across the board, is you would need to not be able to do 2 of 6 activities of daily living. So for those out there that don't know, activities of daily living are like eating, bathing, dressing, transferring from like a chair to a bed, toileting, continence. So if you can't do 2 of those, you would qualify to receive benefit out of your policy, or cognitively impaired.
Okay.
So like dementia, Alzheimer's, anything like that. And so it doesn't have to be both of those scenarios. It can be both, but it doesn't have to be both. And so that's typically like, and that would just be diagnosed by your doctor. And so they would assess your your medical records with your application, and then, deem you eligible to receive the benefits out of your policy.
Okay.
So
Now,
that's
a
kind
lot
of
of
how
my
it works.
career, I worked with patients with Parkinson's disease and like
Yeah.
neurodegenerative illnesses. Are things
Yeah.
like that are going to be chronic conditions that we know are going to progress? Are our clients still able to get coverage in situations like that?
Yeah. So sometimes with like when you go to put in an application and you're already in those spaces, um, it it typically depends on where you're at. I can't say one way or the other that you would get declined or you would get approved.
Right.
There's no guarantee one way or the other. It would just be kind of the state of where you're at. I've had situations where somebody's been diagnosed what's the verbiage, like pre dementia,
Uh-huh.
and they've been declined
Okay.
across the board from all carriers. And so it kind of just depends on where they're at. But I've also had somebody who has had trouble using her hands, and she was approved for a policy, but her premium was really high.
Okay.
You know what I mean? So it
Yeah.
just kind of depends on the scenarios. So
Well, and
it's
I mean,
all
that's not unusual. I was just curious.
yeah.
What happens when, say I were to get a policy right now, I'm perfectly healthy, have no issues. If you are then diagnosed with diabetes or Parkinson's disease or Alzheimer's or something down the line, does that affect the benefits that you have?
No. So
Okay.
there's once you have your like you go through the application and you're approved and you have your policy, a carrier cannot go back and say like, oh, we're going to take this away because now you've been diagnosed with this. Like
Okay.
that's not at all. Like that's the reason why we buy these policies, right? Is to
Right.
protect ourselves down the road.
Right.
And
I
so
just wanted to
then,
make sure.
yeah, yeah. It's a very fair question though, because like a lot of people ask that question too when it pertains to life insurance, because it's like, well, I know I have a terminal illness now. Now I know I'm going to pass away and there's nothing I can do about it. So now am I ineligible? Am I not going to receive this death benefit? And, I'm not going to just die of natural causes. Like this is a disease. Like
Right.
they cannot go back and take that away. So that's a very fair question. Yeah,
Okay.
absolutely. Yeah.
Is there
Yeah.
anything that other clients have asked that we haven't talked about that you feel like is just great information to have?
Yeah. One of the things that pops up a lot is, why are women more expensive than men? And it's
The
like,
million dollar question.
as a female, I'm like, tell me about it, right? Like, why? Tell me. So statistically, it's proven that men don't live as long as women. However, they also don't have as many health problems. Women live longer than men, and they have more health problems,
Okay, as we
if
age.
that makes sense. Yes.
Okay.
So we are more expensive. So it's kind of how that works, and that's typically the reason why, according to the stats out there.
Okay.
And as far as, I mentioned everything can be customized. The average length of claim, some carriers some insurance companies say, oh, the average length of claim, people happens their policy for an average of 4 years. I like to say that the average is between 2 and 4 years, because somebody could live with dementia for 3 years, or, somebody could live with, I had a client once who lived with ALS for a year and a half, so it really depends. So policy design, you can design a policy to pay out for 2 years if you want and pay for that, or you can design a policy to pay out for 6 years, so that can be customizable as well,
Okay.
according to what you think is going to be best for your protection there.
Okay.
It feels daunting to think about, oh my gosh, like it's so customizable, where do we start? And that's truly like where we come in. And I take a lot of pride in that, because that's where I get to know you and get to figure out like what makes your wheels turn, and where do you feel secure, and where do you feel like you're going to get the best protection, and what protection do you already have in place when it comes to your life insurance. And we don't over insure. Like I have zero interest in doing that. So we really try to dial it in as best as we possibly can, with the least amount of cost, to make sure that it's a really good fit. So yeah, I don't know. I think that's kind of the gist of it. It's a lot of information, but that's why we're here. So to just kind of try to peel it back like an onion and get to the core and take the brunt of it for you guys. So
Well, and I feel like, Emma and I are in a coaching program for business outside of this. And what we focus on so much is just gaining more knowledge and gaining more information. And what I hear from my parents and so many other clients that I have, their concerns are, oh, I can't afford that. So I feel like what I'm hearing from you is really to just call in and get connected with Emma and see, because we really don't know. Like you said, there's so many options out there that are completely customizable that we really wouldn't
mm-hmm.
know until we talk it over. And then sounds like maybe you start out and say, okay, no, that's not something that I can afford. Maybe it can be lowered so that there's still a benefit out there. Do you feel like that's a reasonable thing?
Yeah, absolutely. Because I mean, there are so many different ways to work this into your financial picture. And I've had clients that are like, there's just no way, I don't think we can make this work. And then, however, they're like, but I need to sit down and understand this. And so we sit down and just understand the idea first, and they're like, okay, wait a second, yes, I can. And so then once we understand, what it is, what the options are, because I mean, it can be broken down as far as monthly costs, and instead of a single payment, or it could be, like I talked about earlier, it could be rolled over from a different policy. We can find that source of funds from a different policy. So we can get really creative, and try to really make it fit, but also, again, at the lowest possible cost for you, and then get you that protection that you need for down the road, because the cost of care is just astronomical, and it's pretty incredible and extremely unfortunate that is where we're at in today's world, but here we are.
Well, I want to be super respectful of your time. How can people get in touch with you? What's the best way? And again, I'll have all this in the show notes and any additional information that Emma feels like our audience would benefit from. So how can we get in touch with you?
Yeah, absolutely. So I'm on LinkedIn, and I will give my my name on LinkedIn to Corey, LinkedIn, email, and on our Wheeler Associates website as well. I don't have a business Instagram page, but I will soon enough.
I can't wait.
Yes, yeah. And so, yeah, those are kind of the best ways to get a hold of me. And Yeah, or through Corey even, and she can connect us too. And
Absolutely.
I'm happy to help, happy to just be a resource. So yeah,
I'm
thank you so
just
much for having me, Corey.
Yeah, I'm just so thankful for your time for one, but also to know that there are other options out there. I mean, like I said, I had given up on long-term care insurance for my parents for years, just because I didn't know. And now that I know, then
Yeah,
now we can start talking about it because nobody likes to think about getting older. My parents are just starting to talk about, okay, our passwords are here and our stuff is here, and I'm like, not
yeah,
ready. I'm not ready for this, but they're perfectly
yeah.
fine. And it's good to know that there's still options for them out there because they're not too old yet. So awesome. Well,
Mhm.
thank you so much for
Yes,
being on the show today,
yeah.
and we'll chat soon.
Yes, thank you so much. I appreciate you having me here, and I'm super excited to share and be, like I said, be a resource for everyone. So thank you, and don't hesitate to reach out.
Thank you. Thank you for tuning in to today's show. If this episode resonated with you, I would truly appreciate a 5-star review. Your feedback is so important to me. Additionally, if today's topics have sparked a desire for more in your life and you're unsure about the next step, I have a special offer for you. I'm offering a free call to explore how my high level coaching and strategizing can help you gain clarity on your goals, prioritize what is most important to you, and refocus on yourself in the process. Simply head over to coreywin.com/free call. That's www.coreyWinn.com/free call. Thanks for joining me, and I look forward to seeing you on the next episode.